Well, good afternoon, everyone. Right on time, and I'm very pleased to see, there's always someone who's late, but I'm very pleased to see a full house this afternoon. We've got some very interesting topics to discuss and a couple of very interesting guests. Before we start, I've been asked to, as they call it in my country, do some housekeeping. Firstly, for those of you who haven't downloaded the AIFC Telegram channel, you can by scanning the QR code at the back of your registration pass, or there's apparently an app which you can use to be updated on the agenda changes and other activities that are going on. And the second point is, if you would like, if there is an emergency or there's a fire, we need to exit the building on the street side, which is in front of me and behind you. And you can either go out to the left through the small atrium, or you can go out to the right here through the coffee shop. There's also obviously simultaneous translation. For those of you who haven't got headsets, they're at the front of the room. And I've been asked to thank our sponsors, in particular our gold sponsors, Freedom Broker, Visa and Cas Minerals for supporting Astana Finance Days. I hope you're all having a good time so far. Please take advantage of the next couple of days and you'll learn a lot. For those of you who don't know, although it seems to be increasingly large numbers of people, I'm Tim Bennett. I am the chair of the AIX, Astana International Exchange. I've been involved in AIFC since 2018, which seems a very long time ago. And I see some familiar faces in the audience, so pleased to see you all back. I'm also very pleased that we've got two experts in our field today. What we're going to discuss today is fund services. And I was trying to think of a good analogy, because we often think of fund services as kind of the back office and the legal and compliance teams and all this sort of thing. This is not what it's about. If the analysts and fund managers are the brains of the organisation, the legal, compliance, technology, fund administration teams are the heart. And as you know, fund administration or fund management has grown dramatically over the last couple of decades globally. Not only in terms of assets under management, but also different types of funds and different types of regulatory environments targeted towards different investors. And pleasingly, we're seeing the same sort of trend within the AIFC. An increasing number of funds being registered of different types, as well as growth in assets under management. So it's a real growth part of AIFC. And as I said today, we're going to talk a bit about what it takes to set up and operate a fund. So our guests here today are, as I said before, experts in the field, are way more expert than me. The first person on my far left is Robin Holjan. He is the COO of Armicorp Fund Services. They're a global fund services business who recently established a presence in AIFC at the beginning of this year. And I'll get him to talk a bit about his background in a moment. And Alan Kartashkin, who's a partner in Debevoise and Plimpton. It's a global law firm. And I find out today that he knows more people in this room or this AIFD than me. So he's been working in the region for many years and is an expert in funds, compliance and sanctions. So I'm going to start with you, Alan. Why don't you introduce yourself rather than me trying to do that, and tell us a bit about what you've done in your past, and in particular, what sorts of things you've worked in Central Asia.
Thank you, Tim, for this generous introduction, and thank you to the organizers and to everyone who came this morning to join the session. I'm a partner in the international law firm Debevoise and Plimpton. Been with the firm for 27 years, worked in New York, then was managing our Moscow office, and I'm a partner based in London. I think in terms of the region, obviously we have close connections to this country, and one of the most recent transactions was assisting Kaspi with their listing on the New York Stock Exchange, on NASDAQ, which was quite an interesting transaction because it was the first time that a company that had listed depository receipts in London listed them in the US, and actually it's the first time for any company in the world to do this, and it was a very successful process which allowed for investors to do a seamless transition. There was no need to engage in any sort of exchange. It was all seamless. The only change was in great increase in liquidity and substantial increase in market capitalization. Over a few months, Kaspi market cap added about $10 billion. So that was a hugely successful transactions. And of course, we help companies in the region navigate compliance issues, sanctions issues. We've worked with OFAC on a number of transactions, helping minimize sanctions risks for companies in the region. In terms of the investment management and the private funds, the firm has a very big practice, and I think it's one of the leading fund formation practices in the United States, in Europe, in Asia, and the firm is involved in one case or another, in one way or another, I think, with the majority of private equity funds that are in operation today.
Thank you, Alan. Robin, please, a bit of your background, and for those of you who don't know Armicorp, a bit of an introduction to the firm and what you do in fund services.
No, absolutely. Thank you, Tim. First of all, I would like to thank the AIFC for inviting me. It's a great honor to sit in front of you and speak to you about fund services. A bit of a background on my side. I started my career a bit differently. I started as an option trader on the Amsterdam Stock Exchange. Then I moved quickly over to work for different fund management firms, both on the portfolio management side as well as on the deal-making side, before, how I always call it, shifting over to the service provider arena. Worked for two big service providers in the world, held various roles in Amsterdam, London, Luxembourg, and Dubai, which I'm currently based right now. For those who might not know Armicorp, because in Kazakhstan we're quite a new player, Armicorp Group is a leading global service provider. Founded over 31 years ago, we have grown to over 40 offices in 30 plus countries. With a team of more than 700 people, we create innovative, tailored solutions to many of our clients, which are companies, family offices, asset fund managers, institutional investors, and our focus is really on helping clients to thrive in the constantly evolving macroeconomic landscape while building trusted and long-standing relationships. We do that via three business lines. The first one, financial markets or capital markets. It's really about supporting clients with financial transactions locally and globally. Global management, really providing the expertise on company formation, company management, and the like. And one of the last business lines for which we are quite thrilled, because we recently received our license in fund services in Kazakhstan. Within fund services, we provide three key service lines. Fund administration, which is all about NAV calculation, preparation of financial statements, investor email KYC, and alike. Another quite interesting service line, which I will talk a bit later, is about governance and compliance, which is on delivery of directorships, board support, MLRO services, regulatory reporting, and the like. And the last one, BPO, which stands for Business Process Outsourcing, which really sees on automated delivering of accounting and administration, And these type of fund services are not only delivered to those funds established in the well-known fund jurisdictions, but also in the emerging jurisdictions in the fund space like Kazakhstan. So that was a bit of an introduction by myself.
Just to set the scene, why don't you give the audience a sense of what you see, the trends, the challenges in the industry going forward, what's happening in the investment management space at the moment, and what should these guys be looking for?
If I think about alternative investments, the global alternative investment fund industry is experiencing a significant evolution driven by several key trends. First, there is, of course, an increasing demand of alternative investments that has already been here for a couple of years, as institutional as well as high net worth investors are seeking high returns and diversification. At the second hand, the regulatory environment is becoming much more complex, with stricter rules on transparency, investor protection, which, in my opinion, funds and fund managers need to navigate extremely careful about. The last one, technological advancements. Technological advancements are really transforming fund management, operations, as well as the administration. And at the same time, globalization is opening up new markets, requiring compliance with different type of regulations in the jurisdictions where funds are operating in. In my opinion, these trends bring challenges, particularly when it comes down to the regulatory compliance, data management, liquidity, as well as constantly meeting those investor expectations. In my opinion, fund managers need to implement robust compliance frameworks, leverage technology for data security, ensuring accurate valuation, especially when it comes down to those illiquid asset classes, and the meeting for the growing demand of transparency and detailed reporting is also crucial.
We've got a pretty diverse audience here, actually, and I won't let people raise their hands, but for those in the audience who don't know, what do you mean by alternative investments? What's the definition?
Well, the simple answer to that would be anything that is not traditional. No, alternative investments is really the assets that are, let's say, not quoted on the stock exchange or fixed income kind of instruments. It's really about maybe the longer term investments, or at least investments that take a longer time to evolve in order to get a certain return. Think about private equity, real estate, private debt, venture capital, infrastructure, even hedge funds, but also that is something on the rise, the digital asset class, not only the bitcoins of the world, but also companies that are specialized in mining and real assets. Think about the wine that you drink at a restaurant, or the whiskey that you're having after a tough day, or the art you collect, or the watch you wear on your wrist. That is something that is evolving even more and more.
Thanks. I asked that question because not only to educate those of you in the in the audience who don't understand alternative investments, because it does highlight some of the risks in these sorts of funds. Assets that aren't valued every day, they're long-term assets, reasonably illiquid, and as a regulator or as a manager of these sorts of funds or an investor in these sorts of funds, understanding what you own, what the value of that is, and when you can get out of that is sometimes quite difficult, and that's one of the key roles of fund administration. Moving to you now, let's start from scratch. What do you need to do to set up one of these funds? You get a group of some bright young men and women in the room to manage these assets, but apart from that, what do you need to think about?
Yeah. Well, the great thing about investment funds generally, and there could be different types of funds, hedge funds, private equity funds, listed funds. But the great thing about the structure is that it's largely based on contract. So the fund sponsor puts together contractual documentation. Typically, it's a contract that's called a limited partnership agreement. So the investors become limited partners, and the manager is a general partner who's in charge of management. And basically, the investors have no role in the management of the underlying investments, and the manager has all the rights to manage the investment. And this contractual arrangement is very flexible, and it allows for each fund to be customized in order to manage a particular type of investment. But over many years, and the fund industry has really exploded in the last decade. But it's been in existence for 50 years ago. Our firm was already setting up those funds, and nobody knew about them. Now every law firm in the world, major law firm, has a funds practice. And basically, there's a certain market standard in those funds, and but it's not like buying a share of stock or a share of an ETF. There is still a lot of customization, and you're engaged in contractual documentation. So basically, first you put together a high-quality contract that governs the fund, and this is a contract that's going to live for a very long time, because as Robin mentioned, these are investments typically with a 7-year term. Sometimes it could be longer. And this one agreement will manage all the relationships, how the fund is managed, how you exit from the fund. And then there is regulation around that. And in terms of the regulation, there is a certain scope. I mean, the US doesn't really regulate the funds from the standpoint of how you manage the fund, or how you distribute profits, or how you split profits within the fund. Typically, the manager in a typical private equity fund structure gets a management fee 1% to 2% on an annual basis, and then up to 10 to 20% so-called carry, which is basically a share of the profits when the fund exits the investment. And the US is actually quite relaxed in terms of regulation. It's all regulated by contract, unless the fund is so big that there's so many investors that then you have to register with the SEC, and then there is a little bit more disclosure around the fund. Europe has gone to the opposite extreme with, I think, a lot of regulation. Some people may say over-regulation. And actually, that has stifled the development of the funds industry. We have more regulatory expertise in Europe than we need in the United States, for example, although we set up more funds in the US because it's a bigger fund industry. So I think for IFC, it's a great opportunity to find the right balance, looking at the European example, looking at the US example. And of course, between Europe and US, there is also the offshore, a lot of offshore jurisdictions, like Cayman is a very popular one, then Guernsey, Jersey. And one common theme among all regulators is there is a lot of emphasis on anti-money laundering and sanctions compliance. I mean, that's a given. But then there are a lot of differences as to how different jurisdictions regulate those funds.
We'll come on to AML and sanctions in a moment, but Robin, what's your perspective on the regulatory environment globally? And I know your team has only been here for 6 or 8 months, but if you've got some views on the regulatory environment within AIFC, that would be very useful as well.
No, certainly. I think in general, the regulatory environment plays a critical role in both impacting and benefiting in investment funds. Regulatory enhanced compliance and transparency by imposing strict rules aimed at protecting investors, while also what Ellen was already mentioning about to some degree also preventing financial crime, like money laundering. While these are essential for maintaining investor confidence and market integrity, at the same time it increases a lot the complexity as well as the cost that fund managers, but also sponsors and general partners have to deal with. One of the things that I like about Kazakhstan, and that is also one of the things that draw us to this beautiful country, it's about the regulatory environment in Kazakhstan is characterized by a business-friendly policy, in which, for example, the AIFC has its own legal system based on the principles of English common law, which provides a familiar and stable legal environment for not only fund sponsors, managers, general partners, but also investors and us as service providers. There are several key regulatory bodies in which the regulatory framework is designed to be in line with international standards. It has established partnerships with international financial centers and regulatory bodies to ensure that the regulatory framework is in line with global best practices. And I think that this solid foundation is something that not only fund managers but also selfishly thinking service providers like us can benefit from.
That's very pleasing to hear. One of the things that we have been doing with AIFC and AFSA has been as well is thinking about what's the right balance between attraction for business and how do we have a regulatory environment that you have trust in. And to use the analogy that Alan talked about before, this environment is very much, the regulatory environment is very much around disclosure. Yes, there'll be a contract to manage a fund, and it's the fund manager's role to manage that fund. But in some ways, it's buyer beware. So you need to read the hundreds of pages of documentation, or have an advisor who reads that documentation around the contractual arrangements for each fund. And the regulator's role is therefore to make sure that amongst many other things, that contract is followed. And that's quite in contrast, as Alan said, to other regulatory environments where there are a set of rules you must follow, and the fund manager follows those rules, regardless of the type of fund that they're operating, who their investors are, types of assets they're investing in. I want to keep on this theme around compliance, and Alan, you alluded to it before, lots of compliance challenges out there. Do you want to elaborate a bit more around those compliance challenges and the sorts of things you're seeing that fund managers or investment managers are focused on at the moment?
Well, typically, the manager of the fund is, sometimes I'm still surprised after so many years. You look at the fund managing 100 million, 1 billion, 2 billion, and it could be a team of like 4 or 5 people. Those teams are quite lightly staffed, and one of the reasons why they can maintain such light staffing is because of service providers like Robin's team and company, because they actually can take a big part of administration and administer the administrative functions of the fund in a very professional way. And large providers have very strong compliance systems, and also many of them based on automated compliance, on artificial intelligence. For example, I know that I do some work with Kazakhstan banks, and all of the Kazakhstan banks right now are actually doing sanctions compliance in real-time basis. Basically, every time there is a payment transactions, it's all done automatically. The name, the counterparty goes through all the sanctions lists, and there is no time lag. Obviously, in a private equity fund or hedge fund, most of them don't have this infrastructure. Now the fund administrators might have this infrastructure. So I think that's one of the challenges, is having the right infrastructure, and in most cases it's best to outsource it to a professional advisor. One area of compliance that, with respect to which the industry was not prepared, was the escalation of sanctions in the last 2 years. Because the funds are generally very well set up to screen new investors. There is a very elaborate process. In private equity, there is rarely, pressure to accept a client in a short period. There's usually time to do due diligence, to do vetting, and all of the funds have pretty good procedures. But what the funds were not prepared for is a situation where existing investors become subject to sanctions. And a lot of the funds are still dealing with those issues. We get a lot of requests asking for help with how to unwind those type of arrangements from funds in Cayman, in Guernsey, in Asia, in Hong Kong, and Singapore, from all over the world, really. And one of the good things about the fund, as I was saying, it's all contractually based. So now looking forward, we're in this area where, sanctions will only increase. And, there's an upcoming election in the United States, which is very important, but even the current administration sanctioned a historical number of Chinese companies in the last year. If you look, most of the targets of the sanctions were companies from China, UAE, and more recently Turkey. So regardless of the administration, there is always a risk that this trend will continue. So even if you're not looking to attract, investors from one of the neighboring countries which have higher sanctions risks, still, you have to think about it. And the good thing about the contractual arrangement of the funds is that you can actually incorporate contractual provisions which will allow you to unwind, investors, maybe redeem them automatically, or have some other mechanisms in order not to have a situation where your fund is locked because it has sanctions investors. And a number of funds right now are facing this issue. They may have 7% sanction investor, 6% sanction investor, and when they're doing next fundraising, new investors don't want to go into this fund because they have a small share by this investor. Now, I would also add that one of the good things about the fund structure is that no investor really controls the management. So that actually helps. If one investor becomes sanctioned, the fund is still operational. But you can also incorporate contractual provisions which will work automatically to remove those risks and to keep the investment viable.
Robin, do you want to touch a bit on compliance as well? Look, I'm a director of a number of different financial services businesses, and if I look back over the last 5 or 10 years, compliance on the board agenda used to be maybe 10% of the board discussion. Now sometimes I think it's more like 90%. I'd just be interested in your perspective, looking back over the last 5 or 10 years. How much has compliance, or ensuring that you comply, grown as part of the business, and what sorts of things does Army Corp think about in terms of how it gets ahead of the curve in terms of helping funds manage their compliance obligations?
It is a very good question. If I look about Army Corp group-wide, like I said, 40 offices, 30 plus countries, we have a diverse clientele that range from the corporations, the high net worth individuals, as well as basically the investment funds. If I have to think about one of the 3 service lines that I discussed earlier that is in high demand right now, is the governance and compliance. If I look about all the laws the rules, the regulations that came on. I agree with Alan. I think Europe tops on that. I think maybe they have some people being a bit bored on a Friday afternoon that come up with all these additional regulations, so to say. But yeah, that is something that is really an element that we see in high demand, because with all those rules, regulations, etc. If you think about some of the fund managers that are highly successful, but they only have maybe 3 or 4 people, they don't have all that know-how, expertise, resources in the house to deal with the different elements from regulatory reporting, FATCA, CRS, the AML KYC queries that come up, which is why, in my honesty, the law firm that you engage when you want to set up as a fund needs to work hand in hand, not only during the setup of a fund, but even afterwards, because we can help out. The law firm has the legal expertise to deal with those issues. We ourselves, we have a solid team on the governance and compliance side that deal with, like I said, not only the directorships or the board support, but really also with those regulatory queries and activities that a fund needs to be performing in order to be in line with the rules and regulations of not only where the fund is established, so the home member state of the fund, but also maybe the jurisdictions in which it invests in, or maybe where it has an SPV and directly invest in that company. So it's a constantly evolving, because when you think about it from the traditional fund services, it's fund administration, it's a calculation of an NAV, but due to all those evolving elements when it comes down to regulations, compliance, law, tax, you can't do that all by yourself, even though you want to. I would love to do everything by myself, but if I would do that, I would not maybe be here right now. I would be sitting on my own private island, enjoying a nice cocktail or whatever, but you need to have a solid team on the legal side, on the service provider side, that can really take off the elements of your plate that you don't actually want to worry about. You want to focus as fund manager or as a general partner on those front office activities, really the portfolio management and deal making.
I think if I may add on the regulatory side, there is another angle to this discussion. We're talking about the regulation of the fund. The other part of it is how the investments made by the fund are regulated. Right now, we see a rise in regulation in the United States on incoming investment. There were the level of now restrictions, and they're increasing in terms of regulating foreign investment into the United States. It's really never been as strict, and it's getting only stricter. We see the same in Europe and really all over the world. And one of the good things about the fund structures is that the investors in the fund, they don't have any participation in the management of the underlying investments. So actually for regulators, whether it's United States, Europe, or many other countries, those type of investors are much more convenient, because they know that these investors, they're purely financial investors. They're not going to come and manage a company that's involved in biotech in the United States, or has access to personal data in Europe, and having a professional manager between the investors and the asset actually gives a lot of comfort to the regulators. So actually, in terms of an investment vehicle, I think this type of investment is going to be even more attractive because they will have bigger opportunities available to them in terms of finding targets for their capital.
Yeah, look, I couldn't agree more. It's a great point, and let me give a slightly different spin on this, but the same point, which is there's a lot of geopolitical tensions at the moment. You mentioned the election we really don't want to talk about in November, but what we are going to see is a lot more restriction around trade. And as somebody who's been involved in financial services for many, many years, capital flows are very important. And as you rightly point out, portfolio investment or fund investment into a market enables that capital to flow without the entity being, or the company that receives those funds being controlled by the end investors. But the fund obviously has a role in managing that investment. So it's a very important conduit to ensure that, or these structures are a very important conduit to ensure that capital to continue to flow, even if we see an increase in some of the geopolitical tensions that we've seen in the last couple of years. I'm going to now talk a bit about, or ask Robin to talk a bit about Army Corp, but we would like questions from the audience. I know no one ever likes to ask questions from the audience, so I might do the Harvard thing and cold call people, but we'll talk a bit about Army Corp. Think about some questions, and these guys are, as I said before, experts, so now is your opportunity. Robin, you set up an AIFC. What's the opportunity here for the business? What do you see in Kazakhstan that's attractive for Army Corp?
Just in general, Army Corp, we're always looking to explore new jurisdictions in order to expand our service offering, in order to service not only our current client base even better, but also thinking about the future clients that we wish to serve. And when considering a new jurisdiction, we always take into consideration several key factors, including the market growth potential, the talent pool, the political and economic stability. But what is also important to us is really the collaborative nature that a regulator is willing to play and help us in order to professionalize and really set that standard for excellence better. And Kazakhstan really stands out as an emerging hub in which the country has seen large economic growth and foreign direct investments. And also it is strategically located as the new Silk Road between Asia and Europe, which offers significant opportunities. Like I said before, we recently received our fund license in Kazakhstan, and we are really keen to grow this business line further into really this jurisdiction in which we want to, that is basically what every service provider wants to, but you want to become a strategic partner for those fund sponsors, fund managers, general partners in all back and mid office activities, because then those fund managers really can focus, like I said before, on those front office activities, on those activities that are really generating alpha. Let us take care of the boring stuff or the regulation stuff or the AML KYC type of duties that a fund or indirectly a fund manager needs to comply with.
Thank you. Yeah, the next question is kind of obvious, which is, who's your primary clientele, which of course is fund managers, but and some of the other participants in the ecosystem you just mentioned. But perhaps you can give the audience a flavour for, what types of funds you're seeing interest from within Kazakhstan. Who's setting up here? Is it international funds who want a presence here? Is it a group of local investors who decide that they want a fund structure? Are they looking, regionally, or is it just domestically? A bit more colour would be interesting of, where you see the demand coming from.
Yeah. In my opinion, I think it is a mixture of both. I think especially with an emerging market in a fund space, that is how almost every jurisdiction right now, even the primary jurisdiction, started off with. It's always going to be a little bit of a mixture of the local fund sponsors thinking about launching a new fund, whereby previously maybe a corporation or a holding company would have been a good idea. Right now, that idea merges more into investment funds. A couple of years ago, it was really like the specific fund sponsors that have an investor profile in mind that want to set up a fund to invest, let's say, in private equity or real estate with a strong focus. But what I see more and more happening is even the the companies like a real estate developer wanting to set up a fund, a real estate fund, in order to contribute their development portfolio in kind, because at the same time that would help generating an exit for that real estate developer, because the real estate assets are being brought in kind. They have maybe certain investors lined up already, or maybe they want to market it in certain jurisdictions, and those investors would step in by purchasing the shares that the real estate developer acquired by contributing those real estate objects in kind, and that would give the real estate developer the money or the exit back in order to realize maybe additional real estate development projects.
Thank you. Right, now I'm going to ask the audience for questions. So I know this will be a hard ask, but I assume we've got a microphone somewhere. Any questions for these gentlemen?
Sure.
Yeah.
Thanks. A question for Alan. Clearly, Kaspi was probably the most exciting deal out of Kazakhstan in the decade. Can you talk a little bit more about the challenges, particularly given the geopolitical environment and the probably hesitancy in a market like the U.S. for a Central Asian issuer?
Well, you know, it was actually surprising because this was kind of a one of the actually was the first Kazakhstan registered company to list in the United States, and I was surprised how smooth the process went with the SEC, because when you do the IPO, your main regulator is the SEC, and I expected that, you know, we would have a kind of the type of discussion we had on the first, you know, Russian listing in the US 20 years ago. But actually it went very smoothly. The reader actually had some background in the region, in this region a bit more broadly, and was very knowledgeable. And the process actually went quite quickly, as quickly as it would have gone for a U.S. company. So the SEC was really focused on, you know, on the business, on the disclosure, on the financial metrics that they always pay attention to, you know, because the fast-growing technology companies, they have certain ways of disclosing their revenues, their growth, and things like that. But there was no, you know, there was no hesitancy or pushback because the company was coming from the region. So to me, it was actually a very welcome surprise. So I think from that perspective, you know, if there is a right company for that market, I mean, U.S. is definitely open for Kazakhstan.
Very encouraging to hear.
There must be another question out there somewhere.
Yeah, there is.
Oh, there is. Oh, there we go. Oh.
Within the range of funds that, and this is a more general question about Russian related, there are a lot of funds that had either Russian investments or Russian LPs. How stuck are those funds? Is there a lot of progress in unwinding or segregating?
Yes, it really, the answer is it depends. None of the funds were prepared. Like right now, when you do a new fund, you can actually build in some mechanics for, as I said, like automatic redemption. The problem is that when the fund has a sanctioned shareholder or LP, there are a number of issues that come into play. One of the issues is that, you know, the transaction to unwind the participation of a sanctioned shareholder could involve many regulators. And some regulators, for example, the US regulator is supposed to be the toughest regulator, but the US regulator can also give any type of license. Now it's surprising, but for some reason, when the EU created sanctions, well, for obvious reason, because it's EU has a lot of members, and they did not give a broad licensing authority to any of the EU countries. So basically, the way EU sanctions environment works is sanctions are promulgated at the level of the EU, and they're applicable to all EU members. But the licensing authority and enforcement authority is in every EU member state. So let's say you have a transactional issue that involves 3 European countries. You need 3 licenses. A German license is not going to work in Luxembourg. So if you have, a fund with a German manager and a Luxembourg registration, you need 2 licenses. And if you have any other, nexus in Europe, you may need another one. But the other problem is that the local regulators don't have authority to issue any type of license. So they can issue only a license that is permitted expressly in the EU legislation or regulation. So that creates some type of issues that are really difficult to resolve. You can go to OFAC and get any type of license in theory, and actually they're quite encouraging and accommodative to requests for divestment. And a number of Kazakhstan companies have dealt with these issues, and we help them to go to OFAC and get some comfort in terms of the divestment of the Russian investments. But EU don't have these authorities, and for some reason UK followed, they implemented the EU regulation, so UK has the same system, and it also covers Guernsey and Jersey, quite popular fund destinations. So it's, some of them are stuck. There are some ways to, some of the jurisdictions allowed creation of so-called parallel funds, where you create like a parallel fund, and there is a regime around that allows you to do that. You create a parallel fund, so you have now a bad fund with bad investor, and you have a clean fund. But it really, there is no one solution. It's a very complicated issue that many funds are now facing.
Questions from anyone else? Sorry, Count, my eyes are terrible. Thank you.
Thank you.
Hey, Barry.
A question for Robin, possibly. What do you see will be the interest of those investors in this region, and particularly in Kazakhstan, when they go to those fund-related services?
I didn't understood the first part.
I suppose you come here for these fund services. Mm-hmm. Obviously, there's a lot of some other fund or investment opportunities offered by those company or fund manager to the investor here. So what you think those investors will be interested as the investment opportunity? As an investment opportunity, whatever I'm going to say right now, please don't take it as an investment advice.
You can tell it does compliance.
No, I think what we see a lot around Kazakhstan is it's the hedge funds. That is how the alternative investment fund basically started. It started with hedge funds. That is something that we see a strong appetite for, especially for Kazakh fund sponsors, fund managers. But also, if you look at a jurisdiction in which the government is really pushing to develop the financial sector even further and making those investments in the infrastructure projects, both on the equity side, the debt side, private equity, certainly something to watch out for. So I think really like the traditional type of way, but at the same time I was speaking yesterday with a very interesting fund sponsor that is really looking into some of the alternative ways of making investments, alternative ways of the real asset types, the commodity types of things, the investment in artwork. Those are the things that I think will be on the rise and will create an appetite also in the Kazakhstan fund market.
I would also add that, if you look from geographical perspective, you have, I mentioned Cayman as a Delaware, Cayman, Guernsey, Jersey, Luxembourg, and then there's Hong Kong and Singapore. So there is nothing really in between. So there is a potential for IFC to become a platform for investors to invest anywhere. It doesn't have to be Kazakhstan, as we discussed. It could be United States, it could be a Central Asian region more broadly, it could be really anywhere in the world, but it could become, there is a potential for IFC to become one of those jurisdictions where people set up funds, manage funds, because you have all the infrastructure, you have English law, you have an advanced, a very modern dispute center, which is right in this building, right?
Right.
And so I think that's the real opportunity. It's not just to bring capital, not only to bring capital to Kazakhstan, but also to be a hub for investing anywhere in the world.
Benefiting the platform that AIFC and the AFSA has to offer, basically. Yeah.
Questions? A couple of final questions for you guys. Both of you touched on technology, and remarkably, 2 years ago we would never ask this question, but what's happening with AI in both of your businesses, and will it be in 2 years' time that we'll be using ChatGPT next to do all our compliance or all our AML or all our sanctions, or indeed to write fund documentation? So what's your thoughts on the impact of AI on the business?
In my opinion, I think technology is poised to play a transformative role in the alternative investment fund industry, significantly affecting both the strategies of fund managers as well as the operations of service providers. Technology, it is driving automation across various fund management functions, not only from a portfolio management perspective, but also the topic that we have discussed quite often during this session about compliance. Automation reduces manual processes, improves accuracy, enhances operational efficiency. For example, it's funny that you're mentioning AI, but there are already robo-advisors on the market and AI-driven algorithms that can help manage portfolios better than maybe the traditional way. And it's not a bad thing, because it helps fund managers, or it enables fund managers to scale operations and reduce costs. And if I look at the service provider and bring technology into that equation, it is all about streamlining those back and mid-office operations, such as fund accounting, investor reporting, but also the compliance element. And in my opinion, automation and AI reduce those manual processes within a service provider, or at least reduces the manual errors, and it allows service providers to deliver more accurately, or at least, like I said, accurately and quicker to the fund managers that we are servicing. I think in Amico we are running various projects. Some have been completed, some are still ongoing. We recently launched AmiGo, our tailored onboarding AML KYC tool. I think if you would ask anybody in the room that is involved, whether that is from a fund management perspective, a legal perspective, or a compliance perspective, like what is the thing that you dislike the most, I think it's about AML KYC. Nobody likes AML KYC, and if you can already create a platform that would allow, let's say, a fund client or even investors to be onboarded quicker, I think we would all do ourselves a great favor. We are running robotics and AI type of projects to streamline reconciliations of bank statements, broker statements, anything that would help our clients, so the fund managers, the general partners, or directly the funds, to be able to act quicker, more accurate, and more efficient. And I think that is, at least from a service provider, that is what the fund managers are expecting from us as well.
Yeah, I think there is probably less to report from the legal services industry in terms of AI, but one area we have built over the years a database for fund managers and for sponsors, basically. Every time we get our hands on a fund document, we put it in a database. So we have a big database that covers like maybe 2/3 of all funds in existence that, says, okay, if you want to set up $100 million fund, what is the typical distribution requirement, what are the terms for distribution, what type of management fee you can charge, what kind of exit provisions people usually get. So there's like a database that allows, a new manager, or not necessarily a new manager, to get access to the standard terms and maybe to use it in negotiation or in marketing with their investors. And I think obviously, this is a great opportunity for AI to analyze, because we've been doing this for like last 30 years manually essentially, and now there's more opportunity to employ AI. But I think the legal industry still has a lot to catch up with compared to other industries.
Okay. I'm involved in a business which is a app-based broker, and I said to one of the founders, what are you using for AI? And he said, well, of course we're using it for development because it reduces development time. He said, we also reduce it for customer service. He said, we've cut 75% of our customer service team. And I said, oh, what's the feedback like? And he goes, the bot or their AI agent gets better feedback than the actual customer service people. So it's been quite good for them. Not always true. Just a final question for you guys, because we're running out of time here, is, look, if someone in the audience here came across a couple of $1 million and was investing in an AIFC fund, of the type we've been talking about, these alternative investment funds, what are the one or two things that they should be looking for from a fund manager, from your perspective, to ensure that their money is well looked after?
Well, I mean, in this industry, it's the reputation of the manager, because, as I mentioned, the terms are contractual, and at the end of the day, it's the reputation of the manager that is at stake, and people basically have to make their decision based on their reputation, because even if you have the best possible legal documents, if the manager doesn't realize, doesn't make the right investments, doesn't make the right exits, then that's going to be a problem. So from my perspective, you have to look first at the reputation, and then of course you have to remember that this is not like buying a share of stock. You're not guaranteed that you're going to get the best terms. You actually have to read the documents and understand what you're signing.
Thank you. Robin?
Yeah, I couldn't agree more. When, let's say, you would have an individual in this room have a couple of millions or hundreds of millions to spend, really watch carefully what Alan was saying about the track record of the performance of a fund, how much alpha or return it would generate. Maybe not, let's say, on 1 year, but look further, especially those fund managers that have already launched funds in the past. How did they perform in the past? Look also about the legal counsel. What I found always really important, because we've seen fund managers or sponsors coming to us and say, hey, we would like to launch a new fund. How should we structure it? I always advise, and I'm not getting paid by Alan here by saying that, but take a good legal counsel into consideration when you structure your fund. Work together with a good, reputable service provider. So also look at those elements, because we as service provider, we are delivering the NAV. If there would be a reputation of a particular service provider constantly delivering the NAV late, it's not only about the track record, but in the end you might also need to do your tax filings. And if you're late on your tax filings because a service provider cannot deliver, that might result in penalties. So, of course, the most important one, take away track record of a fund manager, preferably if they already had launched multiple funds in the past, how did those funds perform, and what were the reputation of those funds?
Great, thank you both. Thank you to the audience for coming, and let's show some appreciation to both Robin and Alan. Very interesting session. Thank you very much.
Welcome to IAC Chambers at the AIFC Court and International Arbitration Centre. A world-class international dispute resolution services centre, just 15 minutes drive by car from Nur-Sultan International Airport. Modern international standard premises with accessible, cost-effective, highest quality professional support for lawyers and business people. Personalised and cost-effective services support for maximum comfort and ease of doing business. With airport, visa, hotel discounts and car transportation services. Multifunctional meeting and hearing rooms and business lounge with high-speed Wi-Fi and integrated video technology. Printing services and secure document storage facilities. Personalized 5-star standard in-room catering. Cutting-edge digital legal services support with case management, e-justice, legal research, translation, transcription, and access to notary services. A leading venue with a modern lecture theatre equipped with digital technology and comprehensive event management support. IAC Chambers, the world-class dispute resolution support services centre in the heart of Eurasia.